In this video, we're going to take a deep dive at the very popular NOBL ETF, which is the ProShares S&P 500 Dividend Aristocrats ETF. We're also going to compare it to very similar ETFs such as VOO and SPY. And lastly, we're going to talk about how I would personally invest in this ETF. So without further ado, NOBL, for those of you that don't know, tracks an equal weighted index of S&P 500 constituents that have increased their dividend payments annually for at least 25 years. So in other words, those are basically dividend aristocrats. A dividend aristocrat has increased their dividend payment every single year for at least 25 consecutive years. Some of them have done it for even longer, such as 30 or 40 or even 50 plus years. However, because it is more leaning towards stocks that can keep up with increasing their payments, it causes the ETF to overweight traditional dividend paying sectors. You'll find that there's a lot of stocks that have to do with consumer non-cyclical and utilities and other traditionally high paying sectors. The last point I want to make about the description is that NOBL's efficiency might suffer due to a slightly higher expense ratio than some large cap ETFs such as VOO, but it looks better when you consider the amount of portfolio rebalancing that NOBL's equal weighted structure requires. So basically, there is a management team that will make sure that each of the holdings in NOBL are the same allocation percentage. And the other thing is that there is a management team that handpicks some of these dividend aristocrats. So it's not every single stock that has increased their dividends for more than 25 years. It's a handpicked subsection of that larger pool. So once again, the expense ratio is a little bit high at 0.35%. The other important thing is the distribution yield. So it currently sits at 2%, which definitely isn't the highest for something like this that consists of a lot of stocks that increase their dividends. But once again, each of those companies do increase them every single year. So taking a look at the sectors within NOBL, you'll see that it's very overweighted towards, once again, the traditional high-paying sectors such as consumer non-cyclical. In fact, the three most heavy weighted sectors make up over 63% of the entire allocation. So if you're interested in something that's more broad and something that's more diversified, NOBL may not be for you. But taking a look at consumer non-cyclical, we can examine what that is a little bit closer. So non-cyclical stocks or defensive stocks do well in economic downturns since their demand for the products and services continues regardless of the economy. So once again, that is going to be stocks similar to utilities, although utilities I would consider to be a separate sector. But another classic example of non-cyclical stocks is household non-durable goods such as toothpaste, toilet paper, and cleaning materials. So those are the companies that we've all heard of, such as Kimberly-Clark, Procter & Gamble, Clorox, the list goes on. You'll find a lot of those types of stocks within NOBL. Taking a look at some of the larger holdings, we'll see actually Cincinnati Financial near the top, but I wouldn't actually place too much emphasis on the top 10 holdings because essentially year to year you can expect that the holdings will differ slightly, but they'll be aimed to each be about 2%. Each of these stocks can be found in the United States, so if you are looking for some more foreign exposure, you're going to have to find that somewhere else in a different ETF. Now let's take a closer look at the performance. So what I have here is a chart of NOBL at different measures. So what I really want to compare is this top line and this third line. So this is NOBL, the ETF. This is what you'd expect if today you went out and you purchased NOBL. This right here is the actual index that it's aiming to track. So we can see that over time, the performance is not as good as the real Dividend Aristocrats ETF. Once again, that's most likely due to the high expense ratio. And when we compare it to something like VOO, this is a side-by-side view of over the past 5 years. We'll see that NOBL is actually the one in gray, VOO is the one in blue. You can see that performance is pretty similar over the past 5 years. However, what happens if we extrapolate that even further, including, let's say, a recession period? You'll probably find something like this. So this is total returns. So in my opinion, that means dividend reinvestments included in the total performance, which is where the Dividend Aristocrats ETF will most likely shine. You'll notice that over a 10-year period, the S&P 500 Dividend Aristocrats Index in terms of total return has absolutely crushed the S&P 500 in terms of total return. Now, all of this sounds great. However, as I pointed out, performance of the ETF is not as strong as the actual index. So, is there a better way to invest in NOBL? And the answer is yes. On M1 Finance, I took the liberty to recreate this ETF. So it's all 25 holdings. There is zero expense ratio because it is on M1 Finance, and the dividend yield is 2.263%, which is going to be slightly higher than the actual NOBL ETF. So not only do you get zero expense ratio, but you also get a slightly higher yield, and you get the yield as it comes from the companies. There isn't a middleman ETF that's going to do something with the money that comes in. You get every single penny that these companies pay out. I wouldn't pay attention to the performance, especially because on M1 Finance you can only go back until October 30th, 2018. My guess is because of some of these companies, like Linde PLC, which just recently went through a merger, maybe last year or something like that. Basically, the performance can't go as far back as 5 years ago, so I would not take too much weight into this performance. One other awesome feature of M1 Finance is that if you guys want to invest in NOBL, this pie within your own main portfolios, you can go ahead and use this link and do that. And if there's a particular holding that you don't like so much, or maybe there's a holding that you like a lot more than other holdings, you can always customize this pie exactly as you want it. So you don't have to do the actual NOBL thing if you don't want to. I don't see why you wouldn't want to, but again, different strokes for different folks and whatnot. So that's going to do it for this video. Hope you guys enjoyed it. Hope you guys learned something, and I'll see you guys in the next one.